Hey guys, welcome to the Closing Beat. Happy Monday to you. Easter Monday, they say. I saw that on the calendar today. I didn't know it was Easter Monday. Like, it was yesterday. We are financial advisors here at Jazz Wealth, officially ranked 2 years in a row as one of USA Today's best financial advisors out there. Did you know that, right? Where's the applause button? No? Oh, it's got a little bit over there. Yeah, the results will come out on April 23rd, I believe, but apparently surveys you guys have been taking, hey, we're up there, right? Maybe not number one, I don't know, but we'll see what happens. So if you want to go do the USA Today survey, put in a good word, see what happens. We are also the official financial services partner of Drum Corps International, to be officially announced on Wednesday for everybody to see. But if you go to their website, you can see all that stuff there. Looking forward to that, of course, a lot. We also do classes every Thursday. We call them Wine and Wealth. Last week was a Whiskey and Wealth class. We got this thing here, and I was not feeling good the last couple of weeks. I didn't feel like it, and this joined it with a drink there. So we talked about the stock market and what's next. Kind of gave a lesson in some detail there. I also did that in our weekly email that I sent out there. So if you missed it and you're a client, be sure to check that out, get a little update. Where are we going? Where's this market going? I won't leave you guys out. We'll help you today as well. But the day pretty much started with Jerome Powell confirming, in the best words he's ever used, look, we're not going to cut the rates. We'll just leave them right there. We're doing good. His exact wording: economic growth remains strong and inflation is above our target. That means we don't need to be in a hurry to cut rates. I'm not sure the man has ever said something so clearly, any Fed member ever. That was clear. Usually it's like, well, our benchmark is here and our mandate is this and blah, blah, all these words, you don't know. And then you think you have to dissect what do you think he meant. How do you not understand? That means we don't need to be in a hurry to cut rates. That's the equivalent of your wife saying, will you please take out the trash? You can play, but you know what she's asking you to do, right? You're supposed to take out the trash. If you forget, that happens, right? Don't punch me. It's the thing. Anyways, let's talk about the stock market. We're going off on the round track here. We'll go through everything, and then I'll take your questions. If you have any questions, let's dive in. The S&P, I'm actually going to come on over here, the futures side of things. Here's your uptrend here. Most of the day, by the way, in the S&P, you had 80% of the S&P lower on the day, right? So it wasn't one of those days where we were just going to go off to the races. When 80% of the market, and a handful of the Magnificent Seven in there as well, when they are not participating, we need something, right? It's just not going to happen for the market that day. 40% of the S&P was down 1% or more throughout the day. That just tells you it's an off day, right? And as you look through, now this is the S&P, but as you look through different areas, different indices, you're going to find that what was strong before was weak today. And it was just a profit-taking, small, quiet kind of a day. Keep in mind that Easter's still being celebrated around the world, right? The religious holiday. And so, yeah, a little lack of participation. That's all it felt like there. Very little attempt by the buyers today. And what I'd like to show is over here. Let's just look minute by minute. So here's the start of the day right in here. You get your early morning sell-off. There's your attempt at a rally. Just that one lunchtime attempt at a rally. Horrible time for a rally. They call it the 11:30 reversal time. It missed it. It just missed the whole thing. So basically just quiet, lack of volume until right at the end of the day, market on close type orders there. So very, very little participation. That will change as the week progresses here, but that is what you have. Oh, also financials. There you go. So we got earnings season. Not now, April 12th, right? So we've got a couple weeks to go there, but financials are going to be the first to report earnings there. What should you focus on? Think about it. What did Powell just say? And how do the banks make money? So you really want to dive into like who stands to maybe benefit the most out of the financials. What you do is first look at their net interest income. You're going to always hear the big banks, they talk about that stuff in the earnings there. That's the focus because Mr. Powell, Jerome Powell, not Eric Powell, just said, we don't need to be in a hurry to cut rates. Okay, so rates are here, right? And they can loan money out to you and you're willing to borrow it for here. That result, right? Basically, the difference there, net interest income. So how much money are they making based on the money that they have, that they're paying for savings and all that stuff? They give you some money for your interest, right? And then they take that money and they loan it out multiple times. How much? What's the spread there, right? So as long as deposits haven't gone down, then that should be the focus. That net interest income numbers coming in higher could be a bit of a support for that. If you're curious, by the way, Bank of America, JP Morgan, and Morgan Stanley will be the biggest sort of benefactors of a higher net interest income, at least as far as the stock movement goes, right? There'll be some others that can benefit, of course. But as long as they don't say, well, you know, we would have had higher net interest income if it weren't for everybody taking out their money and we have less deposits. Is that going to happen? Where do you taking your money out? If you are, what are you doing with it? Your savings, right? The money you have in CDs and money markets and stuff. You're not doing anything with it. You're happy getting your 5%, 5.25% here at Jazz Wealth if you're interested. So you're not moving your money at all. We need the market to pull back to convince people to go, that's the discount I wanted. Okay, take a few dollars from here. I'd like to take a little bit of a risk with that. So what companies, if you're looking for like to scan through this, which tickers have shown their average deposit growth going up, right? Which ones are those? So let's take a look. Unless this changes, you got Morgan Stanley. This is going to be in order by those that had the highest growth quarter over quarter. Morgan Stanley, then Citi, all right, which people seem to have figured that one out. You got U.S. Bank in there as well. And the final one would be Wells Fargo. All right, so I just looked up the top four and kind of went through that. So they have growing deposits, or at least average growing deposits there. So not too bad. I give you a little lesson in there, maybe something you never heard before. If you look at the NASDAQ today, it just wasn't a tech day overall. I think tech was like third place or so in terms of the number of sectors positive. Yeah, it came in third place. Anything large cap growth oriented still had a decent day, but it wasn't enough in the NASDAQ to get things going. You didn't have healthcare today, biotech, things like that, that would normally give a little bit of a boost. So that's totally okay. The NASDAQ 5-month win streak here. Remember, I play a little game around here. I did it in the Know Some Jazz actually this weekend as well. We say, if I give you a stat, or if anybody gives you a stat, the NASDAQ is on a 5-month win streak. Can it be 6? The first thing you go is, wait, go back. Is 5 straight months of winning rare? Is it odd? Right? It's like my favorite thing to kind of say. Is that odd? If it's not odd, I don't care. I don't want to know. If something's unique, like what the S&P did, look at the Notes from Jazz if you're curious, all the details in there. But if that's unique, then I want to know about it. I want to look further and see, well, where do I need to be, right? So 5-month win streak for the NASDAQ is not rare at all, right? Since the NASDAQ became the NASDAQ, or you would fancily say since inception, there have been 25 streaks of 5-month wins, okay? It's not rare. Now, I'll just throw this in there. Since COVID ended, not since the start of it, but since it ended, there have been 5, this is now the 5th streak of having 5 months in a row of gains. What's unique about that is those other 4, those streaks ended after 5 months. So there were 5 months, the 6th month was down. Then there were 5 months again, the 6th month was down. Then there were 5 months, you get what I'm saying? 4 times. So that's a little unique, but just kind of a side topic there. Anyways, looking around, the Dow was the biggest point loser today, 200 and some points, at one point down over 300 points. It's down a little after hours as well. Gold got a little bit of a boost following up from what we saw on Friday. Bitcoin, there you go. Let's go over to Bitcoin. Bitcoin was lower. The dollar was actually strong against everything else that was out there, so not much to say there. And the Russell 2000, we've been pointing out like, oh, that one's doing well today. The others didn't. Right? It's kind of been a standout. That was different today. It was the weakest of all. Small cap value, which has been the kind of the standout factor of the market. Well, that took quite a bit of a break here today. If you look at interest rates, yeah, yields went up. Surprise, right? Because what the man said, he literally moved the entire bond market today going, we do not need to be in a hurry to cut rates. Okay. So would rates go down? No, right? So prices falling today, interest rates going up. Remember, we're still inside of this choppy but wider downtrend here, looking for direction. So investors are just simply looking for direction. At the moment, interest rates moving up rather sharply here today. I'd also point out oil, what was the thing? I missed it. The missiles, the drone strike, Damascus. I didn't read through the whole thing. I'm like, oh, okay, well, that's what's going on. So there is that as well. Now, I do want to point out, look at the S&P here. We know that we're right here at the moment of a big move, right? We talked about this last week. Up or down, I don't know. I hope for down, but I can't tell you that. I don't know. But we're right at a point where big decisions are about to be made. That's all you need to know. So if you wake up one day and you're like, oh, the S&P was up 1.5%. right, because it's time for a big move. If we're down 1.5%, or we finally start getting a pullback, yes, right here, we're right within days of that actual movement. So, and if you watched last week, you will know why. I do also want to point out S&P. We're in the danger zone, right? We've done this. This will be the 5th time we've done this, where each time I walk through the number of stocks that are overbought versus the number of stocks that are oversold, sharing with you that anytime we get over 65%, the stock market does not like that. People stop buying. They slowly stop buying. So we're now here again, okay? We did this one, and then we did 3 more before that on the show to show you that you don't want to be the one that says, I'm all in right here, but this is the best moment ever in life. Over the long run, you'll be just fine. But in the short term, it's not going to feel really good if you're playing that game. All right. I thought of like kind of a lesson. I just thought, like, what can we talk about that's different? Did you know that April, the start of the second quarter in an election year, is actually when the election nonsense starts to hit the market? You will get moves in the market starting in April that are purely related to the emotion of the election, right? So we're going to follow up on this a lot. We're going to start sharing some of that data with you as we go. First thing we're going to do is we go a little geeky. Can we just start slow this week and then we'll get real geeky? But we'll see. I don't know. All right. What we're going to look at is the volatility of the S&P by using the actual index here. The volatility as compared to other years. So in the dark blue, we've got each month laid out. That is the election year broken apart. And then the light blue is every other year. So for example, in January, the volatility of the market is not higher than normal years. See it? Because the line is below that. And then in orange, actually plot, that's where we landed. Okay, so as the month finished, we basically finished below average. All right, starting in February, we do see a little bit more volatility. That's actually normal, and that was normal this year for us as well. February being volatile in general. I don't know that that has anything to do with elections. Nonetheless, this is where we finish. When you get to April, this is the most volatile month out of the election season. I'm saying month too, so if we're going to break it down by days, this data would change dramatically. But anyways, so we've got April. This is the start of it. This is where this news and all this stuff starts coming in. We basically know the 2 people that are right. Still Biden and Trump. They're still going to do it. You got Kennedy in there and stuff, but the comments that they say have more impact. They become more focused. Hey, healthcare, that's a joke, right? And they start arguing about that. Social Security, who does that affect? People that pay out Medicare and stuff. Oh no, we're going to mess with the healthcare companies. So that stuff starts to play out. Now, April volatility, and I would argue even May just a little bit, it's only off by a little bit, and June and July all have heightened volatility relative to normal years, which is important because in the summertime, what happens? Hey, we go to the Bahamas or wherever, especially this year, everybody buying cruises, right? Carnival Cruise out there saying, we're going to pay off all of our debt because everybody's buying these cruises at astronomical prices. Side topic. Anyways, so we know the summertime tends to be a little bit more calm, not in election years. So it's one of those summers that you're not going to want to miss. All right. Industrials, healthcare, I'd also throw in materials and financials. Those are the 4 sectors that tend to get more of the attention in the beginning part of the election. We'll call this the beginning of the election cycle, right? So you know what potentially is coming up there. Now, a little more geeky. People like to bet on the move on election day because it's a big day and markets usually go crazy, especially after hours when you're following overnight. Remember when Trump first got elected after hours? Did you guys watch the futures market? It was like the world had ended. It was fascinating to watch because it was quick. But if you watch the futures market, the world thought like, oh my God, what is happening, right? So anyways, let's go back over here and take a look. Right now, and I actually plotted this backwards so you could see it. The implied move, you can use the options market to figure this out. The implied move on election day is 3.3%. We have not even seen a 2% day so far this year. We will by then, but crazy, right? So everybody is currently betting on that. So I said, is that odd that they're betting on a 3.3% expected move? So if you take the implied volatility and you chart it backwards, I know this is really geeky for some of you, but hang with me, right? It's actually about normal. So there's been no change in the expectations of the move on election day. That implied move, the volatility beforehand and just before that and the month before that, that will all start to creep into the market, which is why you come into these months and people go, oh no, not him again, whatever one you don't like, right? And that's where the volatility starts to spill over backwards into all this data. Now, the historical moves, I thought, well, okay, if they're implying a 3.3% move, what has happened in the past? So this is my bad, but if it's a green bar, that means it was a positive move. And if it was a red bar, it's not going down. I know, my mistake. It just means it was a negative move. So for example, 1976 was a down move on elections day of 1.12%. Okay, fine. Notice something. The historical moves of the market as technology becomes more of a factor. Notice how the moves are getting bigger and bigger, right? So for this year coming up, 2024, to be expected to be a 3.3% move, even if it's only close to that, doesn't it kind of fit in with everything? Whether it's up or down, right? Because we're just plotting them to show the expansion of the moves. The volatility wrapped around elections will cause you to do things that, you know, come from a state of emotion. Don't stop it. Just hold tight, right? I'm going to work through all of this as we get closer to elections. And we're going to keep checking in on this to share this data with you because I know it. I've been through elections with you guys. I've seen clients do it and they're like, yo, I hate that guy. I want out of this or whatever. All right, you know, a stock or two here and there is fine. But to say that you're going to just bail out and put your money under the mattress, boy, that's a tough one. That's a tough one. All right, let's go into stocks in the news and I'll take your questions. Not a lot today. Oh, come on, man. Baidu, getting a little attention here today. New AI programs coming your way. They are fighting, kicking, scratching, investing lots of money into AI. They want to be the dominant force there. We don't hear a lot about it, but if you're interested in AI and what these guys are going to do, you don't want to like look away from them. You want that to be a part of the focus for you. DJT, the Truth Media, Truth Social there. Barron's absolutely bashed them over the weekend there and said, hey, this is just being moved higher because of all the buyers that we note are in red states are higher than those that are in blue states. You think? Like, I'm not like telling you what to do here, but just keep in mind, there's no, there's no money there. Right? You can bet on the future if you want, but you're paying a lot to bet on the future. So although I'm supportive of like, hey, we should have lots of different social media and stuff. And if you want to start your own social media, go ahead and do it. But I'm not going to invest in you if you don't show that there's some path to a profit and you're not burning through nearly $60 million in just a quarter. It's expensive and it's a hard game to play. You could have guessed this one. Guess the stock. I didn't mean something there. Hey, we're going to buy back $200 million worth of our stock. That is 15% of their total value. Do you think the stock is higher or lower? Well, you're watching the show for a while. You know that any company now that reports a stock buyback and nothing else throughout the day is going to enjoy a higher stock price thanks to where we are in the economic cycle. There's the test that we did. UPS, they got the deal. So FedEx had a contract with the U.S. Postal Service, and now that's done, and UPS got the deal there. I will again say that the move from the other day is also overrated. Seems like something Kramer would say, but you get it there. If you're an AT&T customer, I'm sorry. Your data has been compromised. Not much else to say there. And MicroStrategy warms my heart. I love seeing things like this just fall apart. Careful, right? We don't chase that, right? Give it a break. You'll be fine. There'll be something else for you. There'll be another time. There'll be a better time to buy it cheaper maybe, but careful there. And that's attached to Bitcoin, right? So those guys spent their profits on Bitcoin. They have a lot of it, like millions of coins. So, all right, what else do we have? Earnings, there's not much. You got Paychex, Cal-Maine, I don't know, Dave & Buster's, something else like that. There's not much until we get closer to April 12th, where the banks start reporting, and that's where all the excitement is going to happen there. All right, I'll take your questions if you have any questions. If you don't have any questions, then, what's your problem? So happy to help. It's up 14%. So, okay. Yeah. Well, so I don't like those comments because we could pick anything and then pick a date in the past and eventually find when it was up. Unless it's like Snap or something, right? So those are tricky. They're like, oh, but the stock is up like 22% since, 2018 or something. Okay, let's pick 2019 and see what it's up. Let's pick last year. Oh, no, now it's not up. AT&T data compromised again. I'm sorry. Yeah, I don't know what to say there. 70 million people. So that's got to be everybody. It seems like a lot of people, doesn't it? Yeah, I don't know. Shipwrecked, can you briefly explain, oh boy, Chris, want to answer this question? Can you briefly explain IRS Rule 1256, the 60-40 split that QQQI and many others uses to benefit investors using their covered call ETF? Okay, so when you are using options on an index, right, it's a different tax treatment over there. There are a lot of people that you can set up a separate company if you want. And if you're only trading options on the index, you get a 60-40 split. Well, this is a different story because they are an exchange traded fund that is using those options. So not all of it is taxed at that same rate versus capital gains and ordinary income. So what they do is they go, well, we're going to have like a double accounting method here. So we're going to say over here is our index calls, right? They're using the covered calls. I presume they are still using the index, the NASDAQ in this case. And then they go, and over here is our actual holdings of the NASDAQ, right? So hence generating the covered call revenue. Well, if they account for it differently, then they can say the profits that we had here get that preferential tax treatment. This over here does not. Thankfully, that gets done for you, which is why a lot of people decide to buy an ETF instead of do it themselves. But if you wanted to, you could do the exact same thing. Granted, it's the SPX in this case or the NDX. So you do have to have, a little bit of money to get that going there. But I don't know what the question was, but that's how that works anyways. Yeah. PXD is above the buyout price of XOM. You recommend selling PXD before the XOM earnings to lock in the gains? No, I would recommend selling it when you get to your target. Right? I'm a little bit of a tough lover on this one. You bought it and you hopefully had a goal in mind. Every time you buy a stock, you have a goal in mind for a win and you have a goal in mind for a loss. You got to define that ahead of time. Otherwise, there is mathematically no way to measure if you're successful or not. Should you be betting more money? Should you go to your uncle and get some money and you invest his money? Should you start a business, a hedge fund, blah, 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 all that stuff. Whatever your dreams are, you got to be able to measure that level of success. So I'm never going to say it's because of a news event that you sell a stock. Well, did you hit your target or not? Right? It may cause you to want to raise your loss. You could, so like in this case, I don't know, let's say you bought it somewhere in here and your timing was a little off or something, whatever. And you said, well, I'll let it fall down here if all goes wrong. All right, cool. But I want it to go here to take my profit. Well, now that it's getting close, you could certainly say, well, I was going to lose this much. Now I'm going to raise my stop to wherever I got in at. So I can't lose, but I can still hit my target regardless of what happens with that deal, right? That's how I look at that. So I'm not going to be one that says like, because Biden said this or because somebody bought this or, Buffett owns it now or something. That's not part of an investment plan right there. Crazy kid. If you have 300,000 in investment growth, in just growth, okay, so you got 300,000 just in investment growth, how much should you expect when you're, I'm not sure I know that question, what you're saying there. If you have, help me out with that one. I thought you were saying, if you already have $300,000 in investment growth, how much should you expect when you're 60? I don't know that question. I don't know what you're saying. What? Cody thinks it's a trick question. I think it's close. There's something missing there, or I'm just not understanding it there. Also, how old are you now, by the way? You said you shouldn't be buying much 9 months ago on a closing beat because it was above the moving average and earnings weren't. Did we not get a pullback? Did we not? Every time. Granted, when I say pullback, let me go over here. Right? This guy right here. I don't mean collapse, by the way. So last time we were overbought was like right in here. What day? June. Yeah, the end of June, right? So let's go, let's just use the data. We'll go back, right? Right in, so I'm gonna guess this is like June. So a little bit off there. I start getting overbought. What did the stock market do? Actually, it kept going for a little bit. Then you get a pullback. That's what I'm looking for. This guy right here, all this fun stuff. We've had zero of that, and it's getting worse by the day. We had some volatility, now we have no volatility. That's what I'm talking about. When those stocks get overbought, no crash. No, I'm not crash collapse guy. Like, don't ever invest again. Give us some pullback there. If you had 300,000 in growth funds, okay, so you're saying if you had 300,000 in growth funds for 30 years time frame, let me do that math in my head. I don't know. It can be worked out, of course. I just don't have the tools in front of me to do that. You're saying you're saying I'm 30 years old now. I've got 300,000. They're going in growth funds. How much will I have when I'm 60? I don't have to get back to you on that one. If I knew that in my head, honestly, that'd be pretty impressive. What sectors will do best if the Fed does not cut rates? They will cut rates, but I think your better question there is, what sectors would do best if the Fed doesn't cut rates this year? Because now we're down to 2, right? Before we were at 5 to start the year, then we went down to 3, now we're down to 2. It's more like, what sectors would do best if they don't cut rates? And remember, the Fed is not known historically for cutting rates around the election. So we have a really small window for them to either cut rates or bow out, let the election take place unless something dramatic happens, and come back again at the end of the year, which I think there's one meeting before the end of the year, or just not at all. I think that's kind of what you're looking for. Yeah. Landon says, Dustin, man, I keep picking loser stocks. How much research should be warranted before buying anything typically? Okay, this is sarcasm, but like, you ever think about just doing the opposite? Just for fun. This is a dumb one. I know we used to tease people about this, but if you're buying stocks that go down, what if just temporarily you go, I would normally buy here. Let me short it instead and see what happens. Just for a different perspective. One share, you know what I mean? Different way to look at it. Otherwise, it's not a matter of research. You have a strategy, and you've determined that based on some piece of data or grouping of data that you believe that's the right time and place to buy a stock. All right. If you have been wrong in the past, or you've been right in the past, but right now you're temporarily losing, the trick to that, and this is a simple one, wherever you normally buy the stock, you probably say, somewhere in here, I'm going to call it a loser. Buy half the amount of shares that you would normally buy and make the stop twice as big, right? Because it could be that you're buying the stock just a little bit early and it kind of blips down, has some bad days or weeks or whatever, and then maybe you would have been okay. I don't know. This is a guess. But if that's the case, buy half the amount, double the amount of room that you give it, and let it wiggle. And then as it gets going, go back to where you would have been and add the other shares. It's a fun little math game to play. You can make a spreadsheet or something to do it. But that's what we used to tell people when they would have a rough streak. Now, if you're saying all you do is buy losing stocks, that's a strategy issue, right? But good for you, first of all, to realize I have an idea and that's why I buy stocks. But I can prove that it's not working. So we may need to look into something else. Shipwreck, yeah, that's what I was, yeah. I don't have like that whole calculator and stuff in front of me. Yeah. You're much shorter term thinking than I am. That must be why. No, not at all. So this is just a daily show to update the daily goings on. You're asking me to do a compound interest calculation in my head, and I'll give you 300 grand if you can do that math right now without using a calculator. Oh, you're doing it? Oh. MW. Oh, he's helping. Oh, sorry. Okay. So that's not for me. They're not picking on me. I'm not giving you 300 grand, MW. That's it. I was talking to the other person. No crash, but you're looking for 10 to 15%. Yeah, think about that. It's really perfect. Maybe 10%. We hope for more, but let's start with 10. But how perfect is that? Because otherwise, what are you going to do? The slightly above average person that pays attention to the markets is going, no, I'm not putting my money in that. I'm going to go to a money market fund. I'm going to get over 5%, so I'm only in trouble if over the next year the market goes up another 5% without me. I'm taking that chance. That's what people are saying. So if the markets fall, we're now convincing lots of money over here to come buy it. So don't lose sight of that when the market does start to fall. And now the bears come out and they're like, this is the end. You know, there's always that people, right? Okay, it'd be the end if there weren't hundreds of billions of dollars in money market funds that even if some of that came over and bought some of the market, it's going to slow that down. Yeah. Yep. I love it. Sweet. Well, you know, tomorrow's a new day. We'll see what happens there. And I'll be ready with you guys as well. Oh, do we need to do a winner? Shoot.
Yeah, we do. We have our winner from last week is Anna W. She's not a client, so it's our first non-client in a few weeks to win. So that's exciting. Congrats to her.
All right.
She'll take the $100 gift card.
Nice.
Also, just there was some gambling talk today, and can I throw a bet at you? And I just want to know how crazy you think it is.
Okay.
Okay. So we talked about that betting site that kind of integrates pop culture and stock market all together. It's really just options contracts, but you're betting. So the next Fed rate hike will be before the end of the year. Hike. What are the odds the Fed actually raises rates?
0.
You think it's 0?
I'll take the other side.
It's 100 to win 1,400.
That they'll rate. Well, yeah. Okay.
Crazy odds, but is that a terrible bet? Is that just like the
You
worst
want to bet it because it's a big one.
It's a big one, but it's like, well, everyone's talking about cutting rates, and that's not happening. So why couldn't we raise rates to end the year?
I'll tell you what. I'll take that bet with you. You give me $100, and if they hike rates before the end of the year, I'll give you $1,400. Don't bother using the site. I'll do it.
No, yeah, all right.
You in? Or do you want to do a fraction of it? Do a fraction.
Well, it was more of a curiosity thing. I just feel like there's a chance, but I don't know. Should I be getting 10 grand back on my guess here? Like, I don't know what the odds actually are, but if it's 0, 100 to win 1,400, that's nothing. Should be, by your reaction, it should be 100 to win 10 grand, 50 grand. So
you want to do 10 for 140 to make you feel better? I need money, man. I gave Kevin all my money.
That's true. Yeah, we can hash that out. It was just a thought. And someone had commented on the show last week about it, and I thought it was a good comment. So
hiking rates. All right. Yeah. Well, I don't see it happening, so I'm willing. I'll take the other side of that. But otherwise, yeah, let's wrap it up there. We'll be back tomorrow to do it all over again. And I appreciate you guys watching and putting up with me and all that stuff. I hope you learned something. Try to do some kind of topic each day that may be a little bit different than you can get on TV or anywhere else. And hopefully we did the trick. That's all I got.